Today, I want to talk to you guys about a law that plagues a lot of beginner traders. A law that keeps your P&L on red, and a law that results in you hitting a lot of stop losses. Now, that law is the law of small numbers. Now, when you're new to trading and when you start trading initially, what most beginner traders do is they go around, they scour for different assets and look at different candlestick patterns and look for different relationships. And then they find relationships or patterns that they think work. They select it. However, they select it under a very small sample size. They select it and think, yes, this is the holy grail. This is the pattern that's going to cause me to quit my 9 to 5. This is a pattern that is going to cause me to be financially free. And what you very quickly find is that once you've selected a pattern, you start trading the pattern, and all of a sudden, maybe you have 5, 6, 7 winning trades in a row, and all of a sudden your pattern falls apart, and you're no longer hitting those targets as you first visioned. What you find is that you have made a very big mistake that a lot of beginner traders make early on. And let me break this down for you. I like to call it the law of small numbers. Simply, your sample size is not big enough. When you're backtesting an idea or you're thinking about trading an idea, a sample size of less than 10, less than 15 is simply not good enough. And if you ask most statisticians, they will tell you that for any sample to be representative, it needs to be at least 30. All right. And I'm here to tell you that for any trading system to be viable, you need to have backtested it for at least 100 trades. And I don't care if that 100 trades goes back 2 years, 2 months, 2 weeks. Okay. You need to have backtested it for at least 100 trades. Now, it's this backtesting that will give you confidence in your idea. It's this backtesting that will give you confidence in your system or your pattern, so to speak, that will allow you, even though you face drawdowns, that will allow you to stick to that system and stick to those rules. So, as I say, trading, it's not about memorizing a single pattern, it's about putting in the groundwork to systematically develop a system that works for you. Now, that system takes time. It takes time to refine, it takes time to put together, and it takes time to execute. All right. And when you have put together this system, and let's say it's taken you years, okay, then you can say, right, I have the data based on my system, and now I'm going to trade my system. Now, this is the psychology and this is the philosophy that 99% of beginner traders fail to learn. And it's definitely not something you're going to learn on YouTube. Okay, it's something that comes with time and it's something that comes with experience in the market. As we say, you have to be very careful of your own biases when it comes to trading. It's very easy to find a system that really works. You test it, you go through a drawdown period, and then you ditch the system and you hop to that next system. Again, we're trading like monkeys, aren't we? Okay. So what I will say is just be very cautious, be exceptionally cautious about your thinking framework, your mental framework, and make sure you are refining your strategy or your system as you go along. Now the question is, and this is definitely something I struggled with when I started trading. Footballers, they go out, they have KPIs, they look at the stat sheets, they can analyze their performances. Athletes, if you're a 100-meter sprinter, you can analyze your performance based on how much you train, your strides, your diet. There are metrics you can use to analyze your performance. Now the question beckons: what is the metric to analyze a trader's performance, and how do you improve as a trader? How do you go from A to B as a trader? We all know how you improve at school. We know how you improve at your workplace. You take on more responsibility, you study harder, but no one seems to tell you how you improve as a trader. Or how do you improve as a trader? Improving as a trader, I believe, falls under one very simple rule, okay? And the rule is, in my opinion, what I think the way to improve as a trader is learn from your losses. The fact your P&L or your equity curve is negative, there is a reason why. The fact you have a hit rate of 20%, there is a reason why. Learn from your losses. How do you learn from your losses if you're not journaling? How do you learn from your losses if you're not tracking what positions you're entering, what patterns you're using? How do you do all those things? Okay. So, this is a very good time to take a sec, analyze your trading system right now, and think to yourself, can I make this more of a systematic approach? Can I start to think about trading in more of a systematic way to actually allow me to improve and get better week by week, month by month, day by day? And I'm just going to give you one technique to do that. And that is make sure you are following your rules. Write your rules down. I will enter this trade if. I will come out of this trade if. I will stick to 1%. I will take 20% out when I reach 2 to 1. Write these rules out. And what I believe is that when you break these rules, these are what you call trading inefficiencies. And the goal of traders and the way you become consistently profitable is to eradicate those inefficiencies. All right, so that's it for today. That's kind of the um, exit on psychology. Let's get straight into the market and let's see what Bitcoin has been up to. Now, in the future, we're going to be looking at gold as well. We're going to be doing some different assets, gold, maybe Euro USD, and some other pairs. But for today, just because I'm tight for time, we're simply going to look at BTC and see what BTC has been up to. Now, I think it's a good time um, to take a step back and listen carefully as to what's happening here as far as the grand scheme or bigger picture of things. A few days ago, we talked about the monthly time frame. We went down to the weekly and we went down to the 4 hour. Okay. Now, today, what we're going to talk about is we're going to just analyze this range. Now, what we can see clearly here is that we have a nice clear range where we have our clear range lows and we have our clear range highs. Bitcoin has come into that range. Okay. It's deviated the range. It's broken structure. It's deviated the range high. It's come back down into discount. Now it's accumulated. It's given us a 1, 2, 3, 4. And then it's broken structure. Okay. But it hasn't quite managed to close above the major high. So we do have another deviation from the range high. Now that's what we're working with so far. That's our range. Let's call a spade a spade. That is our range. Now, as far as the internal structure of our range, well, what is the macro structure first of all? Our macro structure is higher high, higher low, higher high, higher low, higher high. If you look at this on some time frame, and we can do this quickly, maybe you see, if we look at this perhaps on the daily time frame, look, this is our daily structure. High, 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 low, high, 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 low, high. This is our daily structure. But we don't care about our daily. We're looking for immediate trades we can get into. But this is our primary structure. We can also see that we have deviated that range high. We've broken the structure. So based on that, that makes this level here, this low of our range, a weak targeted low. We tried to come back down. We were stopped by this 8-hour demand. Although this 8-hour demand was unable to break structure. And what I mean by it was unable to break structure, if we draw the purple structure and the gray structure from the way down, it looks like this. Lower low, lower high, lower low. This is all internal structure, by the way. Lower high, lower low. This demand zone tried to break structure, but it did not quite break structure. Instead, it reacted off of this 3-hour supply and proceeded to relax here. Okay. Now we were planning for a few scenarios. Scenario number one that we were planning for was a reaction, I believe, around here. We had a zone around there. We didn't quite get that. Scenario number two was a reaction from this zone here. Now we got a tiny reaction. We definitely got a reaction that took us to that supply zone from demand to supply. Nice little demand supply sandwich. Okay. And if you did get into that trade, great. However, it's not the reaction we wanted, right? Because the reaction we were looking for is, first of all right, we were looking to break that structure there. But before we break that structure, we need to break this structure here. So we wanted to see something like this: lower high, lower low, lower high, lower low, a flipping structure, a retracement, and a continuation up. But we didn't get that. Instead, we reacted off this 45-minute block. That was an obstacle in our way. And shortly after that, we came down lower, okay? And now we seem to have created a lower high for what looks like to be another lower low, okay? Right. So where does that leave us as far as our next trades? Well, now that we understand the broader perspective of things, in terms of our next trade, what I'm going to show you is how you can plan, okay, what that next trade might look like. So let's quickly get rid of all of this and let's tidy this up. Once we tidy this up, we'll get straight into it. Okay, brilliant. So I think this is tidy enough. All right. So what we have here is this, bit of market structure, tiny, narrow range. However, it is clear to see that this was our last. This is our last support. Our last support before we head for this low here, and this low is at 91,288. Now, just because we haven't quite reacted off this support doesn't mean it still can't hold. We've had a 75% mitigation into the zone. Okay. However, the zone is still viable. Now, yes, I understand. The more taps we have into a zone, the less likely it is to work. I understand that. However, I've seen this time and time again where we have multiple taps into our zone and it still works. So first of all, we have had tap number one, we've had tap number two. Tap number three, usually a full tap model doesn't tend to be successful based on the back testing I've done. However, we're just going to watch to see if we do get something here that would make this zone viable. So in my assessment, I would still be watching out for this zone and wait for us to fully lose this zone before I have this low as a target. So what that means is, can I plan a trade off of that zone now? Well, thinking about a trade off of that zone, first thing I'm going to do is treat this entire zone as a range. So I'm going to move that there. I'm going to move this down here. Okay. And all of a sudden, look how nice that looks now. That looks a lot more manageable just because of that decision we've made. We're treating this zone as a range. Okay. And inside our range, we've had tap one, tap two, tap three. Okay. Could we potentially be coming down to sweep this low before we head up? And based on that, I'm going to be looking to plan trade number one off of that point. Okay, off of that liquidity point. Now, not only is this an interesting liquidity point, this is also a point that, if I just quickly change this, brilliant. So this is also a point that is confluent with this higher low, right? This higher low point. Okay, so if price is to come down and do something like this, dips into that level, transitions, and then heads up, I will be looking to enter along right about there. However, emphasis is on the if. Now, price does seem to be coming down quite aggressively right now. All right, so I have to be wary of that. So we have to say, right, if this is our structure so far, if we do come all the way down right now, we can't really justify a trade until we close above that level. All right, so I'm going to be chasing this down to see exactly what happens at that level for potential long number one. Potential long number two is a long from this level. Okay. All right, now this is the last level before we head down to this low. If we lose this demand zone, we're coming from this for this guy. If we lose this guy, we're coming down for that guy. Okay, and that's exactly how it works. So why not look for a long trade here? Look for a long trade here. Now, some people might say, right, because if we lose this level, okay, why not chase it down? Well, if we lose this level and we actually get structure that looks like this, so we break structure bearishly and then we get a nice deep retracement, yes, there's no reason why you cannot look for a short play there. How would you look to enter that short play? Well, you will simply chase that market structure up on a lower time frame, see what price does as it comes out, okay, and then as soon as you get a flip, there you go, that's your flip. You looked for the retracement and you look to drive that down. Okay. Now you might think of that and say, well, we're so close to the low. Why short there? Well, yes, if you are a beginner trader, I would not advise doing that. But if you're quite confident trading this way and you understand the rules of how I trade, then I would by all means try that one, because that's definitely a viable play. Okay, so we've got short number one, we've got long number one, long number two, we've got a potential short failing this zone. Okay, and that's how we're playing this zone. Now, what if price decides, do you know what? I'm going to deviate this low, but I'm going to start making my way up to this range low. And if that's the case, I'm going to be looking for a short play here. Nice short play there, so we can extend that over there. All right. And I'm going to be looking for a short play there, but if we are to reclaim that level, all right, I'm going to be having my eye on the following pivot point, which is right there. So if price carries on its merry way up, I'm going to be looking for a reaction here as well. Okay, so I'm going to call this idea number one, okay, from that deviation high. And I'm also going to call this, I'm going to put another short up there as idea number two. Okay, so these are the plays I am waiting for. These are the levels I'm watching for over the next few days, this week potentially. Don't forget, Wednesday is coming up. Wednesday is in 2 days, and usually that's when Bitcoin likes to do its mega move. Wednesday, Thursday. Okay. All right. Now, you do have to be careful here, because understand that everything we're analyzing so far is internal structure. It's internal range structure. Understand we have multiple ranges going on here. We have our macro range that we had. So over there, we had our big range. Then we had an internal range that took place here. Not just that, we also had an internal range here, although it was short-lived. And now what we have here as well is another internal range here. So could this be what's happening, where we're having range, burst, range, drop, range, burst? Okay, that wouldn't surprise me, but we're not entering any of these trades until we get very clear market structure confirmation. Okay, and for those of you, I'm aware we've got quite a few beginners here in this channel this month. So what does a confirmation look like? Well, let's say this is our zone, or this is a POI. Our confirmation is primarily based on market structure. So let's say, where do I enter this trade? How do I enter this trade? Well, I look at the time frame of interest. I come back down. As price dipped into my zone, or my POI or POL, my line, my place of interest, I look for a break in market structure. Where does that break take place? That break takes place right around here. Okay, so we can even label that boss or break in structure, wherever you wish. Now, this is enough to start looking for a trade. This is enough. However, if you are trader A that enters based on this break up here, look what happens to your risk to reward. Let's say the target for this trade is here. Okay. If you're trader A that enters there, that's what your risk to reward looks like. Okay, so you're getting a nice expectancy of 2.2. Now, if you're the trader that's just a tad bit more patient, you wait for that retracement. Let's say that retracement comes into a demand zone that you find here. Okay, and you enter based off of that demand zone, based off of that retracement. Let's see what that does as far as your risk to reward. Well, look, all of a sudden your stop loss is still at that low. Your target is still the same, but you've doubled. Okay, you've gone from 2.23 to 4.48. Okay, so in trading, patience is definitely rewarded. It's not always rewarded, but it is definitely rewarded. This is our model for our entry. Now, if you are trading not based on market structure, I would suggest you incorporate market structure into your trading. But if you're using oscillators, maybe RSI, maybe MACD, this is where you start to incorporate those divergences, because as price is tending down, your oscillator will also be tending up as you come into that zone, giving you a nice bullish divergence that squeezes the price up. Okay. So whichever confirmation you're using, if it's working, stick to it. All right. And that's basically it. So these are the trades I'm currently interested in. Now we can see that we're getting a nice rounded sort of shape here, aren't we? Bitcoin is giving us a nice rounded sort of shape. And usually when Bitcoin does a nice rounded shape like this, it does tend to break up, giving you a nice bucket. Okay, but again, we're not here to predict, we're here to react to what price does, and we will not be entering a trade until we get our confirmations. Okay, so that's it. That's it. Now, in the case that price doesn't deviate from this range high, internal range high, well, if price decides to break through, well, I may look for a quick retracement just to take it up to that high, based on what the risk to reward is. If the risk to reward looks nice, why not? Why not? Okay. Well, we're going to leave it there today. And I'm glad we've spent some time and corrected some misconceptions. And we're obviously going to take what we've said today and see how can we apply that to our trading journey moving forward, and how can we utilize that in our next trade. All right. So we'll leave it there today. And I will spruce this up a tiny bit, then I'll post it up so you guys can have a look and download it. I'll also pop it on Discord, and I will see you next time.